Hey everyone, welcome back to your weekly market outlook. This is for the 9th of September 2024. So let's get started with what's going on last week. So we do have the NFP numbers and the unemployment numbers. The labor data, basically, it's not as dire as what the market is looking. So let me just break this down to you for a little bit. So we have the unemployment rate. This is down to 4.2% from 4.3%. This is as per consensus. And in terms of the NFP gains, there were a couple of things to take note of. The previous month's number, that was already pretty low. It was revised down to 89,000. Market was expecting 160 to 164,000. We got 142,000. So the gains is still there in terms of the gains, and comparing it to the revision from the previous month, it is not a bad gain at all. So it does indicate that the labor data, it is softening, but it's not in a dire situation as what the market is expecting. So this is actually probably the worst case scenario in terms of how the labor data release is supposed to be. I think market was expecting that the numbers should be pretty bad. That way they can just price in for that extra 25 basis points, expecting a 50 basis points cut from the FOMC this month. I don't think we're going to get that. Looking at this number, we're currently looking at just 25 basis points being priced into the market. So there were some adjustments there. We can see how the US dollar initially reacted to the downside, and then everyone just settles in and look at that and say, yeah, you know what? The unemployment rate actually kind of cools off a little bit. So yeah, there was a little bit of an adjustment that goes on Friday, and we can see that from a technical point of view later on in terms of where the US dollar is actually going to be heading in the near future. So obviously this week this is going to continue with the inflation number. Now if we take a look at the inflation number here, the headline inflation is actually expected to cool off really quickly here. 2.9%, that was the previous month's inflation number. We're expecting a year-on-year inflation number to drop down to 2.6%. Now in terms of the monthly growth for the core CPI as well as the CPI monthly growth, we do expect these numbers to remain the same in terms of growth at 0.2%. So what does this mean? If we have the inflation number coming off lower than 2.6%, that could put the market into thinking, hey, you know what, maybe the FOMC should cut by 50 basis points, or if they didn't cut by 50 basis points this month, then at least sometimes this year that could be a 50 basis points cut. But we have taken a look, and in terms of the notes given out by the FOMC there, we got a couple of members speaking out, and what was announced from Jackson Hole was basically the shift moving away from focusing on the inflation number to actually looking at the labor data. So they would really focus on stabilizing the labor data first. That would take priorities unless we have a huge drop in the inflation number or whatnot. But that's one scenario to look for, the market wanting a 50 basis points cut. However, if we have a higher than expected inflation number, for example, we get 2.7 or 2.8%, inflation is probably not cooling off really quickly in the US, and that would pretty much settles for a 25 basis points cut in terms of what's coming up from the FOMC this month. All right. The other big thing this week is that we are expecting the the ECB, to actually start cutting interest rates. Now, in terms of the consensus here, obviously, market is pricing in a little bit lower than what the expected is. 4.25%. Market is expecting a huge drop to 3.65%. I think we're going to be getting a 25 basis points cut. So in reality, I think 4%. It's probably the more ideal rate that we're looking at. However, the overnight rate and the banking rate here, we might see a little bit of an adjustment in terms of the gap between the two of them. So I think that's the one that could be adjusted. But in terms of the interest rate cut, this week we are expecting the ECB to cut by 25 basis points. So just keep that in mind. And then the PPI numbers themselves, I don't think there's anything much in terms of the PPI numbers. We do expect the monthly growth on the PPI to continue. 0% for the core PPI to 0.2%, 0.1% to 0.2% for the PPI numbers. Okay, and that's pretty much it in terms of what's really the main focus for this week. I think a lot of traders are going to be focusing on the inflation numbers coming up from the US, as well as the ECB interest rate decision. We do have several data coming up from the UK, like the GDP numbers as well as the unemployment numbers coming up from the UK, but that's not going to be the main focus. I think a lot of traders are just going to be focused on Wednesday and Thursday for the inflation numbers and the interest rate decision from the ECB, which is going to be on Thursday. All right. Let's take a look at the technicals here. So we did mention in terms of what we are expecting, we do expect the US dollar to kind of strengthen. And, if we take a look at the technicals last week, it was a little bit of a mess. We do expect the US dollar to strengthen, but we're not seeing that at the beginning of the week. But, whatever happened last Friday with the position adjustment and, everyone's just coming to, facing reality that I think the cut from the FOMC is going to be 25 basis points. We have seen a stronger US dollar. Now, the Aussie USD here has moved below 67 cents. Monday morning, we see a little bit of a recovery, but do keep in mind that 67 is it's actually going to act as a resistance for the Aussie USD. In terms of how far the Aussie could go, we're currently looking at and projecting a move a little bit lower towards 66.25 and 66 cents as a support for the Aussie USD. But yeah, do keep in mind, I think we're still going to be looking at the US dollar strengthening a little bit this week. This is more of a technical correction, and all the other major currencies does require a technical correction, and Aussie USD is currently moving below 67. We do expect this to move down a little bit lower, 66.25 to 66 cents for the Aussie USD. Now, next is the Euro USD. In terms of the Euro USD, sustained close below 1.10 for the week. Right now, we have a little bit more room to go. Obviously, this is going to be in a tight range. We still have 1.1050 as a support, but ultimately, I think we should track a little bit lower, closer to 1.10. And in terms of how far it can really go, there's actually room for this one to go to support 2, which is closer to 1.0950. But I think we are going to get a stronger support at 1.10, and we'll see what happens around that level. In terms of the momentum here, yes, I think these oscillators are indicating that we are losing a little bit of a steam there. I think we are now in for a proper correction for the Euro USD. Likewise for the Pound USD. The Pound USD here is a little bit tricky. This is due for a correction, but in terms of how strong the sterling is, it's not really trying to push below 1.31. So immediate support for this one here, it's still going to be at 1.31, but are there any possibilities that this could track a little bit lower? It could track to 1.3050, but it's going to be really hard for this one to break below 1.3. Now, if we take a look at the oscillators here, the RSI is still actually maintaining position that the uptrend is still intact. The stochastics is actually correcting itself, so we might actually see a little bit of a range-bound market movement here on a Pound USD with immediate support at 1.31. The next available support is going to be at 1.3050. Ultimately, the last support is going to be at 1.3. At this point in time, I'm not expecting the Pound USD to actually reach 1.3, but at the same time, this is actually going to we're not going to be seeing a significant push to the upside unless we have the US inflation number really cooling off significantly. If we get a number below 2.5%, then yeah, everyone is still going to be pricing in for that 50 basis points cut. That's going to be the driver for the sterling to the upside. But until that happens, I think this is still going to be a little bit more of a range-bound market week for the sterling here. All right, lastly, we have the dollar Japanese yen. With the dollar Japanese yen, if we take a look at where price is currently finding its low there, it didn't actually break the August low. Now, this is very important because that pushed lower on Friday. It didn't close below that August low, indicating that there's actually significant support for the dollar Japanese yen at this point in time. In terms of support itself, it currently falls at around 142 for the dollar Japanese yen. If we round things up, it is actually a little bit lower than that. Below that, we still have 141 as a much stronger support level for the dollar Japanese yen. So I don't think any, the bears are probably not going to take much action until we break at least below 142, and even more if we break below 141. But for now, considering that there might be some adjustments in terms of the rate cut expectations, then yeah, there could be a case for a bounce on the dollar Japanese yen. In terms of how significant that bounce is, at this point in time, we still are being capped by 143, but the moment intraday movement starts going above 143, then it is actually going to track higher. The pivot itself is located at 143.75, does indicate that the dollar Japanese yen could be on track towards 144, and once it goes to 144, obviously it's going to be staggered. 145, 146 is going to be the next resistance. But for the dollar Japanese yen, this one here, we are actually currently in a position where it's less risk to buy the dollar Japanese yen, and considering that technical correction for the US dollar is not quite done yet, there's still room to go. We might see this one strengthen a little bit, but in terms of whether or not, oh yeah, it can reverse all the way up to 148, that's yet to be seen. We do have resistances on the upside: 144, 145, 146. Those are going to act as a strong resistance for the dollar Japanese yen. So with that, good luck to your trades for this week, and I'll see you soon.